The president is talking about mitigating the side effect of negative rates. Does that mean tiering is coming?
I think it's a bit premature, I think, to take that conclusion. What is clear now is that the perspective of low rates for longer has triggered that debate about the side effects of negative rates. So I think it's fair to say that this issue has to be analyzed carefully. But you need, in any case, to find a monetary policy case. You cannot just conclude, let's do the tiering because the economy is slowing down and the rates are low for longer. So I think it's fair to say that we have to go into this issue, but we need to have a convincing monetary policy case to do that. Now, when you look at the economy today and the lending channel, we don't see any particular problem in the lending channel today. But as we know, with the weakening economy, it may happen in the future. So you have to be ready and to look at the possible instruments or sort of decisions you may need to take in case. So readiness, yes, but I think don't rush too quickly into conclusions. But it's fair to say that the conversation has started.
If the conversation has started, does it mean that interest rates will stay low for even longer?
I think it's difficult to say today. I mean, when you look at prices, market prices, yes, I mean, the date of the first liftoff has been pushed further by market participants, and so this debate on the tiering has been coming. As I say, the perspectives of rate for longer is something you have to look at all the consequences of that. It's a repetition, by the way, but...
Does tiering make the tool of negative interest rates less effective?
The negative rates have been extremely useful to support the economy, basically because the opportunity cost, of saving has been lower. So you push people either to spend or to go into risk, more risk, and supporting the economy, going into investment and all that. So we have been big effects of the negative rates on the economy, which is good also for the banks themselves, because if their customers do better, it's also good for them. The question that comes today is that with a slowing economy, because of international and geopolitical factors, you get lower growth and you get also the negative effect of the rate situation on the intermediation margin. And that's how the debate has been triggered. Now, on the economy, you have to see how the things will evolve.
At the ECB, you've been working on a new lending program, and I want to talk to you about timing. The announcement of the program came a lot sooner than many people expected. The start of the program will be somewhat later than people expected. Why is that?
Well, I mean, what we call the TLTROS, the funding for lending, is a very flexible instrument, and there are many parameters in that instrument. What we have decided in the Governing Council is to disclose some of the parameters. First is the TLTROS is available. That means it's basically a funding instrument. Borrowers, banks will be able to borrow 2 years, up to 2 years from now. So this is a funding side. It basically responds to the concerns that we have about congestions on the bond market linked to two cliffs effect. One cliff effect would be in June of next year, the other March of the following year. So that we have addressed. The other issue with the TLTROS is to what extent do you want to use it as an instrument to support lending conditions? And that's the incentive scheme that you need to put in place. That's premature because you want to have more clarity about the evolution of the economy and the lending part, that supports the economy. For the time being now, we don't see anything special in terms of lending, banking intermediation to non-financial corporations or for households. So things are okay on that side. Of course, a central bank has to look preemptively, has to look how the situation potentially will evolve. And with the weakening of the economic growth, you can, you must be ready to act the instruments needed, if you want to support lending. I would say in terms of pricing, for the TLTROS, you want to first to make an assessment. What is the pricing that corresponds, the best to the problem you want to address? So if it's lower lending at that time, the pricing have to take that into account. It's a bit premature now, so we're going to decide in due time, as we say.
Can you translate due time?
Well,
how much time do you have?
The first allotment would be in September of this year, so you have to do it before. So that will be decided maybe, I don't know, but maybe when I will be gone, that means for the Governing Council of June, because we also will have the projections at that time. So that would be one opportunity before September. But this being said, you can always, the Governing Council can always decide to change the incentive scheme of a program. We did it in the past, given the evolution of the economy, we can do it in the future. As I said, it's a very flexible instrument. So you can do that. But it must be adapted, to the problem you want to address, which is a monetary policy issue that you have to have in consideration.